Welcome back to the Compound Journey, everyone. Today, I'm breaking down a new position I recently added to my portfolio. It's a company that Warren Buffett bought toward the end of 2024. Since Buffett's initial purchase, the stock is now trading roughly 37% lower. And after digging into the business myself, I decided this pullback was enough for me to start buying. This is a company with dominant market share in its niche, currently working through a slowdown in part of its business. A slowdown largely driven by weaker housing activity. But despite that near-term pressure, I believe this company's fundamentals remain firmly intact. And that's why I'm buying at today's price. The company is Pool Corp, and in today's episode, I'll explain what Pool Corp does and walk through my long-term investment thesis for adding it to my portfolio. As always, this is not financial advice. This is simply me documenting my own investing journey. So let's start with what Pool Corp actually does. Pool Corp operates as the largest wholesale distributor of swimming pool supplies and equipment, and is also one of the leading distributors of irrigation and landscape maintenance products in the United States. The company operates about 448 sales centers across the United States, Europe, and Australia, though the majority of those locations are based in the US. Pool Corp provides products to pool builders, swimming pool repair and service businesses, and commercial pool operators. They also supply specialty retailers that sell swimming pool supplies directly to consumers, as well as irrigation construction and landscape maintenance contractors. What this means is that whether a pool is being built, serviced, or a homeowner is purchasing supplies from a retailer, Pool Corp often sits upstream in the supply chain, profiting from the chemicals, equipment, parts, materials required to build and maintain a pool. Now let's get into the fundamentals of Pool Corp and why I believe this is a compelling long-term opportunity. My thesis really comes down to a few key reasons. The first is strong recurring revenue, driven by ongoing maintenance required to support the existing base of pools across the United States. Pool Corp's revenue peaked in 2022 at roughly $6.1 billion and has declined roughly to $5.3 billion in 2024 as the post-pandemic housing and pool construction boom has cooled off. But here's the key point. Roughly 2/3 of Pool Corp's sales are tied to maintenance and minor repairs for existing pools, and that portion of the business has remained stable and has even seen modest growth over this period. The primary reason overall revenue and profits have declined isn't because maintenance demand disappeared. It's because the other major revenue streams, such as new pool construction and large remodel projects, have slowed significantly as housing activity softened. In other words, the most durable and recurring part of Pool Corp's business has held up well in this economic environment. The pressure comes from the more cyclical side of the business, not from a breakdown in the business fundamentals. It's also worth noting that Pool Corp is still directly benefiting from the surge in pool construction during 2020 and 2021. A large number of pools were built during that time period, and every one of those pools now represents a long-term maintenance obligation that Pool Corp profits from. So even as new construction slows today, Pool Corp is servicing a larger installed base of pools than it had prior to today, which continues to support recurring demand for maintenance, chemicals, and replacement equipment. A pool is largely a discretionary purchase for most consumers, but once a pool is installed, the maintenance required to keep it operating becomes essentially non-discretionary, unless of course you decide to drain and abandon the pool entirely. This means every time a new pool is built, it effectively adds a long-term customer to Pool Corp's ecosystem, creating recurring demand for chemicals, equipment, repairs, and replacement parts for years or even decades. Because this recurring maintenance segment has remained strong, what Pool Corp ultimately needs is a recovery in new pool construction and remodel activity, which makes up roughly 1/3 of its revenue and has been pressured by a housing slowdown and a relatively high interest rate environment, both of which are correlated with new pool builds and remodel projects. Which brings me to reason number 2. If my thesis depends on a recovery in new pool construction and remodels, a segment that I believe is closely tied to the housing market, then the obvious question is, how did Pool Corp perform during the last major housing downturn? To answer that, we need to go back to the 2007-2008 housing crisis. During that period, Pool Corp's revenue declined by the mid-teens while operating income fell more sharply. This was at a time when the housing bubble had burst, home prices were falling, new construction had essentially stalled, and consumers weren't just avoiding pool builds, they were pulling back across nearly all discretionary spending. Despite that, what's important is how Pool Corp performed after the housing crisis. Coming out of the crisis from roughly 2010 to 2019, Pool Corp delivered exceptional performance, with strong annualized stock returns beating the S&P 500 and consistent double-digit dividend growth as housing recovered and the installed base of pools continued to expand. And that brings us to today's housing slowdown, which is nowhere near as severe and looks very different from 2008. The 2008 crisis was driven by a collapse in credit, widespread mortgage defaults, and forced selling across the housing market as home prices declined. Today's slowdown, by contrast, is being primarily driven by affordability, the result of rapid home price appreciation after 2020, combined with the highest interest rate environment we've seen in decades, has led to fewer new home buyers, which naturally results in fewer new pools being built and remodel projects. I believe this housing slowdown will eventually improve, and when it does, Pool Corp's construction and remodel business should recover alongside it. In the meantime, Pool Corp's maintenance-driven revenue remains strong and continues to act as a stabilizer for the business. The key takeaway is that Pool Corp has already proven it can navigate a housing crisis far more severe than what we're seeing today. And while the current slowdown is challenging, it is nowhere near the scale or severity of the 2008 housing collapse. I believe the company is well positioned to manage through this cycle as well, just as it has in the past. So to sum it all up, this is a long-term investment that I believe is a high-quality business currently out of favor due to a cyclical slowdown. Roughly 2/3 of Pool Corp's business is driven by recurring maintenance demand that has remained resilient, while the remaining portion is comprised of new pool construction and remodels, a portion of the business that I believe has been under pressure largely due to a slowdown in the housing market. I believe that the current housing market will eventually improve, and when it does, Pool Corp's construction and remodel business should recover alongside it. And that's why I'm comfortable adding this position now, not because I expect a quick turnaround, but because I believe in the long-term fundamentals and I'm willing to be patient. As always, this is not financial advice. This is simply me documenting my own investing journey. If you want to follow alongside as I build this portfolio over time, track the wins and the losses, the breakdown of the thinking behind each decision, make sure you subscribe. As always, thanks for watching, everyone.